Let's talk about Tesla, stock symbol TSLA. Last time I did a video on this was back on February 11th. It was trading right here at about 328 a share, and since then has dramatically fallen even more to the downside. So the question here is when to buy Tesla. Do you try to catch the falling knife, which I'm never a fan of doing? I always like to see a stock settle at a support level, a key trend line, and show that it's willing to do three things: test, hold, and then bounce. I don't need to get in right at the bottom. What I'm looking for is for it to test, to hold that level, and then to bounce. Let somebody else try to be the hero and find the bottom. That's not what I'm looking to do. I'm looking to get the meat and potatoes of a move, not to try to call the very bottom or get out at the very top. So with Tesla, what I'm going to do in this video, I'm going to highlight the technical levels, also update you on the previous video, because there is some key levels that are about to get approached here. And what I really like about the chart is there's a convergence of a number of moving averages, Fibonacci levels, and key support levels here to be aware of. So this is the descending or declining triangle that started it all. We broke below it, and then there was this one support level. I wasn't sure if there was a lot of support at this level, but it really did surprise me, because when we broke down below and confirmed the declining or descending triangle, we came back up, tested the underside of the support level. It didn't offer any support on the way down, but it did offer some resistance. It fought back, pushed the stock back down to where it's at right now at 302.80, 38% off of the all-time highs. Now, what makes this one so interesting is that you have this rising trend line that goes all the way back to April of last year. And that trend line, while it's not close to testing it, it's converging with a lot of other support levels. Like I mentioned here, you have the 200-day moving average. That's just a hair above it. You also have this support level right here. So you can see where you got a 200-day moving average, a support level that's lining up with it too, and then you have a rising trend line underneath it too. Then there's another support level here, and I know there's getting to be a lot of lines on this chart, but what I'm noticing is that there's a convergence of support underneath. It's a range. It's not an exact dollar amount. But again, you can keep drawing these lines, and they keep offering up additional layers of support. Then we can throw a Fibonacci onto this chart as well. We'll tag that right against the April lows, just like we did with the rising trend line too. We got to adjust it just a shade here. But again, you got the 61.8% retracement level right here that coincides with all these other support levels. And again, I usually don't let my charts get this messy, but it's astounding to me how many support levels there are at this particular price point. Put an AVWAP on there. Again, I apologize for how messy this chart's getting, but it is pretty wild. This AVWAP line, this little teal color here, it's tested it and held it in the past, and once again, it gets right underneath the 200-day moving average and some of these other support levels. So what I would say is that there's a good thesis here that suggests that perhaps Tesla is going to come all the way down to this 278, perhaps as low as 254, but somewhere in that range is where I would be looking for a significant bounce to take place. Again, with the stock market, I like to look for bounces off of key support levels. So let's say tomorrow it rocketed back up to the moon or whatever you want to call it. If it did that, fine. I'll tip my hat and watch it go. But it's not doing that off of any key support levels. So I don't necessarily want to try to make that a play, because I don't have as high level of confidence in the sustainability of such a bounce. But if it gets down to here, my level of confidence starts to increase by getting down to these levels right here, because there's so much support underneath. So in an ideal world, it tests like this 200-day moving average, and depending on your tolerance for risk, you can put the stop loss probably like somewhere around 265 to 260, or if you have a much wider tolerance for risk, you can even put it below all these support levels and maybe even go as low as 248, 249. A lot of it too will come down to how the market responds in the coming days. Is the market going to continue to melt lower, or is this just another dip buying opportunity for the bulls to get long on again following a 4-day sell-off in the S&P 500? Now, one of the things that I would tell you when it comes to stocks, it's easy for like a stock like Tesla. It's got a polarizing figure that heads it up. It's easy to let your politics intermingle with your trading. I would say don't do it. Regardless of what side of the aisle that you're on, it never makes sense to let your political views infiltrate your trading decisions, because in the end, the market doesn't care about your political views. The stock itself doesn't care about your political views. So it doesn't make sense to make any trading decisions based on your own personal views. Instead, use the analysis, use the charts, and see where it goes from there. If you enjoyed this video, I would encourage you to like and subscribe, and tell me down in the comments below, how far do you think this Tesla stock continue to fall here? Does it find some support in that area, that 275 to 270 area? Do you think it'll find some support there and bounce? Or do you think it's a little bit sooner than we expect, and maybe in the next day or two we might see a bounce? Let me know down in the comments below. Thank you guys, and God bless.